Despite the recent pullback, Bitcoin's price continues to move higher and higher, year after year. Not because of hype, but because the same forces keep pushing capital in one direction. And right now, those forces are being discussed in all kinds of political and institutional forums across the world. It appears that Strategy won't stop buying Bitcoin, Washington won't stop tweeting about Bitcoin, and the world has come to a point where they have to address the elephant in the room: Bitcoin. When heads of banks, governments, and corporations start responding to those forces all at the same time, that's not a trend. That's, well, as Michael Saylor puts it,
the reason Bitcoin is going up, it's not an accident. It's because capital is economic mass. It is flowing from a high energy state, the mountaintop, to a lower energy state, to a more efficient state.
I'm Oceans. This is Beyond Bitcoin. Let's go. For years, Bitcoin was dismissed as speculative, too volatile or too risky by all the biggest names in finance and politics. And we could all see that the writing is on the wall for that narrative to shift. During this entire behavioral shift, one company stopped waiting for permission and never stopped buying. Can you guess who that company is? Yes, that company is MicroStrategy. Strategy. It's strategy. Sorry, strategy. That's Stratego by Milton Bradley. Yes, it is. While critics keep asking when Strategy will stop purchasing Bitcoin, and by the way, Strategy now owns over 700,000 in Bitcoin, the rest of the world's programming is starting to short circuit, asking a different question. Why didn't we act sooner? Well, maybe it's because they've been secretly planning this all along, feeding you false information while they rake in the profit. At the center of this is a man that needs no introduction in the Bitcoin space, Michael Saylor. Saylor has a way of explaining complex concepts as an engineer teacher would explain to a group of second graders. Just listen to this recent explanation of his as to why capital behaves the way it does. Watch this.
But I think where people trip up with your language is this idea of the inevitability of the 60%. What would you say to that?
So we're dealing with three concepts: risk, volatility, and performance. Okay, so I've addressed the risk issue by pointing out that there is existential risk in your given network or frame of reference. And I just want to make that point that once you understand that risk of being in that frame of reference, then you have to figure out what's the source of the volatility and the performance. And if you don't understand why the asset does what it does, if you don't understand the economic physics involved, then you'll think it's random and you'll feel like the performance is risky. But I want to give you an example of a physical metaphor. I'm a hiker and I come across a mountain lake, and the mountain lake has 500 trillion gallons of water in it. And yeah, I don't know how it got there, but it's there. The water's chilly, it's clear. And I look down and there's a waterfall coming off the mountain lake. And the waterfall, it's very beautiful and it's very turbulent, right? Water is turbulent in a waterfall. Water is not turbulent in a glassy lake. So the turbulence is volatility, right? And there's waterfall. And then I look at it. And now if you look and you say, I don't know why that water falls downhill. I don't know if it'll keep falling downhill, but I hate the volatility. Then I guess you can take a selfie in front of the lake, go swimming, get cold and leave. But let's say you're not a tourist, but you're an engineer. So you come across the same lake and you see the waterfall and you see the 500 trillion gallons and you think about gravity and you think about sunlight. And now I know how the water got there. The water got there because the sun shone on the ocean. The water evaporated from the ocean. It rose up in the clouds. The wind blew it against the mountain. It condensed and it rained into the mountain, and the water ran off the mountain into the mountain lake. I know how it got there. And then I think, well, if I create a dam near that waterfall, I build myself a dam, I put a turbine on the dam, and then I drop 1 billion gallons of water. I channel 1 billion gallons of water through the dam, drop it 60 feet. And then I plug that into a hydroelectric power plant. I spin the dynamo, I make electricity. And then if I'm really smart, I run the electric power line to a village down in the valley and I light up the village or I light up the city. Now, someone can come along that doesn't understand physics and they can say, good idea, Junior, but what are you going to do when the water stops flowing downhill? Well, I'm like, well, I actually think the water's flowing downhill because of gravity. Newton solved that for me. And then someone else comes along and says, good idea, Junior, but what are you going to do when you run out of water in the lake? I'm like, well, there's 500 trillion gallons, and I take out my calculator and a billion gallons or whatever. It's going to last a long time. Like, well, it's eventually going to run out. I say, well, the sun keeps shining on the ocean, and the ocean keeps lifting the water out of the ocean, and it drops it on this mountain. And that's why there's water in the mountain. But you're right. There's some kind of natural limit. And I suppose there's a limit to the amount of energy I can pull off of this dam, but it's a large number. It's a lot more than your donkey cart, and it's a lot more than your steam, wood stove, and it's a lot more than your coal power plant. And maybe it's a lot cleaner than burning, gasoline. So I'm an engineer, and you're seeing performance thinking it's random, and that's why it's going to stop. And you're seeing volatility and you're thinking it's random and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. It's a lower energy state. You've got potential energy in the water and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion, and the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity, and they're invested in the stock of a company in Africa that's going bankrupt.
Here's what matters. Saylor isn't predicting price, he's explaining direction. Capital moves from weak to strong, unstable to stable, politically managed to structurally fixed. And as he explains, volatility is not failure, it's just the result of this moving waterfall of his. And MicroStrategy understood that very earlier than most, which is probably why they don't time their entries and why they don't stop buying. They identified the lowest energy monetary state, and they aligned with it.
I think at some point, the general sentiment will flip from being short to being long, and we'll have a face-ripping rally north. I just can't tell you when.
Now, here's where this stops being a Bitcoin-only conversation. Did you know that during the time of this recording, the World Economic Forum is meeting this week in Davos? The World Economic Forum? Yes. In Davos? Yes. Is that like the annual meeting featuring all the world's prominent thought leaders in finance and economics that takes place in Davos, Switzerland? Yes. This week at the World Economic Forum, the tone wasn't optimistic. It was defensive. And one of the clearest admissions came from Bridgewater Capital's Ray Dalio. Take a look.
The monetary order is breaking down. Okay. What I mean by the monetary order is that fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way, and that there was a change. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact you could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars. And so as we're looking at that, and you reported what the stock market and so on, but you didn't report that the gold market is also up 3.
We did say that earlier this morning. Okay. It's up to record levels again, and silver.
Is you look at what is happening and why it's happening and who's buying it. So let's just take a moment on that capital war issue, okay? We know that both the holders of U.S. dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? So if you have other countries who are holding it and they're worried about each other, and we're producing a lot of it, That's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking. And now if you take the conflicts, you can't ignore the possibility that capital wars, in other words, maybe there's not the same inclination to buy U.S. debt and so on. We at least need to talk about those possibilities and find out who is buying and selling what that is behind these market movements.
And what capital wars? This is critical. And I know Dalio isn't endorsing Bitcoin in this clip, but he's explaining why fiat credibility is eroding. When monetary trust breaks, trade wars turn into capital wars, reserves shift, and debt becomes weaponized. And capital starts searching for something outside that system. Now, doesn't that sound like the same waterfall, if not very similar to the waterfall that Saylor describes, just viewed from the top instead of the bottom? You know, from Davos, because Davos is up in the mountains, and it has a waterfall coming down from the mountains, you know? Anyway, also happening at Davos, BlackRock CEO Larry Fink highlights how trust is breaking down from traditional outlets like the World Economic Forum. Just take a look.
We believe that outside the United Nations, this is the largest gathering of global leadership of the post-COVID period of time. For many people, this meeting feels out of step with the moment. We hear all about the elites. And how does that play out in an age of populism? How does an established institution make a difference in an era of deep institutional mistrust? And there's some truth to the critique. I believe in this forum for a long time. I certainly wouldn't be leading this if I didn't believe that we can change and make the world better. But it's also obvious that the world now places far less trust in us to help shape what comes next. If the World Economic Forum is going to be useful going forward, it has to regain that trust.
And to add more fuel to the economic fire, here's Coinbase's CEO, Brian Armstrong, speaking in, is it Davos? Oh yes, it's Davos, about how banks are going to need to compete for their customers going forward. Take a look.
Banks should have to compete on a level playing field, and if the American people feel like the banks are not paying high enough interest rates and stablecoin rewards can offer them more, then maybe the banks should have to pay higher interest rates to compete, right? I don't think there should be any protectionism.
Do you think that was put in directly for the banks, that was lobbied by the banks and put in?
Yes.
So in the wake of our institutions breaking down, what happens if some real world wars happen or sanctions or blackouts start to occur? Will you be prepared? Sat123.com provides satellite phones that work when local infrastructure, institutions, and nations do not. If you don't have signal, if you don't have infrastructure, it's no problem. These phones connect directly to satellites, meaning that you still have communication even when everyone else goes dark. Go to sat123.com and use the promo code SIMPLY for 15% off your entire purchase. Bitcoin teaches you one thing really early, and that's redundancy is paramount. And sat123.com is redundancy for communication. And you know what redundancy makes me think of? Backups. Accidental lost seed phrases and clumsy backups are how people get wiped out. And if you are serious about self-custodying your Bitcoin and you want confidence instead of fear, you gotta check out thebitcoinway.com. They'll walk you step by step through secure key storage, hardware wallet setup, encrypted backups, and even running your own Bitcoin node. You get real guidance tailored to you, so you're not guessing at every critical decision. Plus, there's on-demand support for advanced topics like multisig and inheritance planning. Nobody touches your keys and you retain control with someone who's been there coaching you step by step the entire way. Get started at thebitcoinway.com/beyondbitcoin for a 30-minute free consultation, because if you're going to take self-custody of your Bitcoin, you need to do it with confidence and not with fear. So let's zoom out. This isn't just one or two voices from economic powerhouses. This is kind of like alignment. Here's another clip from Rick Wurster of Charles Schwab, the CEO of Charles Schwab. You know, they manage $12 trillion assets under management, talking about what kind of adoption he sees with his clients currently. Take a look.
Yes, we've been active in both. So in crypto, we do offer crypto ETFs, Bitcoin futures, closed-end funds. In fact, our clients own 20% of all the crypto exchange-traded products in our country. So they've been very active. We've seen visits to our crypto site go up 90% in the last year. It's a topic that's of high engagement. And for privates, we have made private investments available to our clients. We've done through third-party managers like KKR and Apollo and folks like that. And we've also stood up a team of alternative experts. If you want to invest in alternatives at Schwab, you're going to need to talk to a professional to make sure they're right for you and to make sure you find the right strategy for you.
How much?
You even have Vice President J.D. Vance going on national television and stating how digital assets are now a permanent part of our economy.
The consistent fear that I hear is that there's still this perception that digital assets are not welcome in the mainstream economy, and let me promise you that our effort to change the policy is purely about changing that. We want our fellow Americans to know that crypto and digital assets, and particularly Bitcoin, are part of the mainstream economy and are here to stay.
So let me just point out, these are not Bitcoin maximalists. These are institutions adjusting under pressure. So let's bring it back to strategy and why their purchase of yet again more Bitcoin matters so much. It seems that while everyone else debated narratives, Saylor tapped into the future and understood very early where this was all headed. Now, he's told this $500 million melting ice cube story many times on many podcasts, and for good reason, it shouldn't be forgotten. This is the reason why strategy will likely be one of the most successful companies for the foreseeable future, because Saylor saw in Bitcoin a solution to his problem. And now, strategy owns over 700,000 Bitcoin. 700,000, can you believe that? Banks are preparing for custody. Governments are reframing policy with the upcoming Clarity Act. Corporations are experimenting with all kinds of different rails. MicroStrategy didn't front-run the markets with Bitcoin. It escaped a failing system. So here's the clip notes of what might push you over the edge to start studying Bitcoin if you haven't already. If institutions are repositioning, and banks are preparing, governments are reframing, and capital keeps flowing in, then zero Bitcoin exposure is no longer neutral. It's freaking dangerous, man.
The way to de-risk this and the way to promote progress and growth is to go out and act on your principles. Don't be afraid. Listen, everyone's afraid of risk, but there's risk everywhere. You know what's riskier than buying Bitcoin? Not buying Bitcoin. What's riskier than buying Bitcoin is not buying Bitcoin, right?
It's a bet that this entire convergence reverses, and history doesn't really favor that bet. This isn't about Bitcoin winning, it's about the old system losing coherence. Saylor explained the mechanism, Dalio confirmed the fracture. Institutions are following the flow. The waterfall doesn't announce itself, it just keeps moving. Now, if you want to go beyond the headlines, price charts, and surface level Bitcoin takes that I just love to do, then you need to check out Club Orange, formerly the Orange Pill app. It's a Bitcoin-only social network built to help you find real Bitcoiners near you, discover events, and connect with merchants and communities that actually live this stuff. Go to Club Orange today, download the app, and DM me at Oceans, O-S-H-I-N-S. I read all my messages there, and I look forward to hearing from you. Thank you very much for watching these videos and connecting with me on Club Orange. Thank you so much for watching this video. If you like what you see and you want to see more, make sure you hit that like button below. You could just leave a comment, or you could even subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. Also, don't forget to hit that notification bell. I'm Oceans. This is Beyond Bitcoin. Until next time.